Hello explorers, thanks for joining us again and welcome back to another exciting and informative video on our YouTube channel. If you are joining us for the first time, we want to thank you for watching. For those of you who follow our channel, you notice we focus on informative and educating content on this channel. Today we are looking at AGOA Preferential Trade Agreement. In this episode, I am going to explain one of Africa's most important preferential trade arrangement. I will be able to dive deep into the complexity with regards to the AGOA Preferential Trade Agreement, what AGOA is, and how countries in sub-Saharan Africa should pay closer look with regards to this particular AGOA, how it could be a tool that could shape policies in the continent of Africa, and how the African countries should manage AGOA moving forward with its renewal in 2025. So without any more delay, let's just dive straight into it. In considering AGOA, for those of you who don't know, AGOA is a trade program meant to establish stronger commercial ties between the United States of America and sub-Saharan African countries. It was enacted as of the 18th of May 2000. The Congress of the United States signed the African Growth and Opportunity Act, also known and commonly called the AGOA, into law. It is important to know that the Act established preferential trade agreement between the United States and selected countries in sub-Saharan African region. Initially approved for 15 years, AGOA was reauthorized for 10 years June of 2015, based on the Obama administration at the time. It also expands AGOA moving up to September 30th of 2025. So we're looking at how this trade agreement is going to be moving forward. In considering this arrangement, it is important to emphasize in this video that AGOA is a preferential trade agreement and not a free trade agreement. The difference here is to be very noted that a free trade agreement is a treaty between two or more countries to establish free trade area where commerce is good, commercial goods should point out, and also services can be conducted across their common borders without tariffs or hindrances. However, in the case of preferential trade agreement, it is a trade pact between countries that reduces tariffs for certain products to countries who signed this agreement. In this case, most African countries or sub-Saharan or sub of the Sahara who've signed this particular agreement. While the tariffs are not necessarily eliminated, they are lowered than countries not party to this particular agreement. It is in the form of economic integration. The United States Department of Commerce described AGOA, so to point out, based on their own assessment, as the most liberal access to the US market available to any country or regions which the United States does not have a free trade agreement. AGOA was also meant to establish a route for the United States to develop its free trade agreement with certain African countries. However, this has yet to happen in a number of ways. The most important question here people should be asking, most African countries should be asking is, what is the AGOA's purpose? Was this set to accomplish? With certain sectors, AGOA is often looked at as a form of aid to developing countries. The United States government's website says that it is helping millions of African families find opportunities to build prosperity. However, this image of trade as a form of aid is not entirely accurate. When needed, AGOA has provided the United States with preferential access to valuable commodities such as oil and other very important goods within the African market. AGOA has also served as a bargaining chip for the United States in several areas. The trade relationship between the United States and sub-Saharan Africa has never always been skewed in one way. The US imports far more than it exports. AGOA didn't change this. If anything, it increased the scale. US exports to sub-Saharan Africa peaked in 2014 to over 49 billion. The number for American imports are much higher. They peaked over 86 billion, so to point out, as of 2008. AGOA never made these major changes in looking at the different figures. In considering this particular trade agreement, those import numbers directly reflect American commodity needs. At the peak of American imports between 2007 and 2008, the United States imported over 1 million barrels of oil per day from Nigeria alone. This is a direct contrast to the drastic drop in oil imports by 2015, when there were periods that the US imported no oil from Nigeria. This trend affected other sub-Saharan African production countries as well. The period between 2014 and 2015 represented one of the times when the trade balance between the US and sub-Saharan Africa was nearly even. In looking at this, AGOA is also a very useful negotiating tool for the US government. Most US presidents has the ability, so to point out, to resign access to AGOA to any country if they were determined that it's not working towards certain goals. In essence, the US president has ability to cancel the AGOA relationship between any or with any partner nations if they feel that it doesn't benefit the United States, looking at their different interests. In moving forward, most recently, AGOA was used as a negotiating tool just prior to the reauthorization in 2015. At the time, South Africa, so to point out, our government refused to let American chicken farmers export chicken products to South Africa, accused of dumping at the time low-quality chicken products. The United States had been allowed to export chicken to South Africa for over 15 years. The South African argued that the American export would destroy its local poultry industry by undercutting prices. On the American side, it was argued that this ban was a barrier to the US trade and investment. It was also argued that South Africa, with its advanced economy, though stalled, didn't need a preferential trade deal. This goes back to a development side of the AGOA, which we've pointed out in this particular episode. In looking forward, the act also renewed AGOA. South African inclusion in the Renewable Act became questionable due to this one particular sticking point. In listing other areas, in the end of it, the South African government conceded and allowed the United States to export over 65,000 tons of chicken products to South Africa. Trade also with the United States was too important for South Africa to risk losing chicken over chicken, so to point out, especially as the US is South Africa's largest export market. South Africa exports to the United States as of 2015 were overvalued to just over 9.1 billion US dollars. They consisted mostly of manufacturing materials and also metals and other very important minerals. Despite some complexities that surrounds the AGOA Preferential Trade Agreement, AGOA has provided or brought in some very useful transactional trade between sub-Saharan African countries and the United States of America. Figures shows there's been huge increase in the number of very important areas. Total two-way trade between the US and sub-Saharan Africa has also increased in different ways. If you look at the figures from over 5.8%, looking at just over 36.9 billion as of 2015 to over 39 billion in 2017. Top US goods exported to sub-Saharan Africa in terms of machinery, just over 2.5 billion, and looking at vehicles have moved to just over 1.6 billion. Aircraft parts and also very important equipment in the continent, mineral fuels and very important things like over 1.7 billion, and more importantly, electrical machinery has amounted to just over 864 billion. On other areas, top US export markets in the region includes countries like South Africa, which experienced just over 5 billion. Nigeria had over 2.2 billion. Ghana is experiencing over 886 million. So to point out, Ethiopia is also a very good recipient in terms of trade, amounting to just over 873 million US dollars. Angola is also having over 800 million US dollars based on the AGOA Preferential Trade Treaty. In looking at this, top US imports from sub-Saharan Africa on the other way around, coming out from Africa, has been over 111 million, looking at different other commodities and services. Oil includes just over 11 billion. So to point out, precious metals amount to just 4.5 billion in US dollars. Cocoa production and also cocoa exports amount to 1.2 billion. Vehicles and also a very important thing like iron ore and steel, which amounts to 950 million US dollars. Top sub-Saharan African suppliers to the United States were South Africa, amounting to 7.1 billion. Nigeria exported over 7.1 billion as well. Angola over 2.7 billion. Cote d'Ivoire or Ivory Coast, to the point out, amount to just over 1.2 billion, and Botswana moved to over 750 million US dollars. US investment in sub-Saharan Africa as a result of AGOA. Africa stood at just over 29 billion if we look at the figures in 2017-2018, the latest year available information. So to consider this, however, brought down to just over 23% in different ways. The largest, or so to point out, the three largest destinations for US investment were Mauritius, that received over 6.5 billion, South Africa over 5.1 billion, and Nigeria as well received over 3.5 billion as well. If you look at this different aspect with the importance of this particular trade agreement, sub-Saharan African countries or foreign direct investment in the US stood as just over 4.2 billion, looking at figures of 2017, and if you consider that moving forward to just up to 164% compared to 1.6 billion in 2024. So far, AGOA has made some tremendous increases and also improved the transactional aspect with regards to African countries. After 20 years of AGOA, if you look at where the African continent stands with sub-Saharan Africa, the preferential trade program, which particularly such as AGOA, is very different from the free trade which we've discussed in earlier conversation. And African countries are shy away from the AGOA has been a win-win partnership between the United States and sub-Saharan African countries. Whereas AGOA has improved the lives of Africans, it also has enhanced US interest in the continent as well. Not all African countries have benefited from the AGOA because they did not actually develop the required export and strategy which is needed. If you are new to this channel, we will encourage you to subscribe and share our videos to your different network. From our own assessment in looking at AGOA, AGOA has had some very important success in the continent of Africa, but improvement needs to be made to the program. Observers, according to experts considering this, is saying that in reports available that AGOAs demonstrated some very extensive cooperation between the continent of Africa with regards to trade. In looking at this particular legislation, which has also removed all tariffs based on 6,400 products available to export to the United States, it helped to move the US a little bit closer in terms of relationship from just aid to trade, from donor recipient to one of mutual benefits and also gains, which has become very important and which what Africa is expected to be looking at, not just being a continent that has also been on the receiving end, but it being a continent which has also been a major player in terms of business operation and transaction regards to investment in other parts around the world. Most people are worried about with regards to how AGOA is going to play out to 2025. AGOA also is not likely to be targeted for repeal because it is not a free trade agreement. While certain African countries or African goods are given preferential deals, the reduced tariff, sub-Saharan African countries do not operate with blank free trade and zero tariff. In fact, the deal provides the United States with access to African goods and commodities that help drive the US economy. In looking forward, additionally, it will be foolish of different administrations coming into power to see that AGOA works for the benefits of the United States only, as evidence that the AGOA could be used as a tool by the US government to portray its interests. It is pretty clear, looking at the South African chicken trading incident, the US government is able to use access to American markets to dictate trade opportunities in Africa. Countries like Kenya have also already expressed worries that trade access through AGOA could restrict a lot of other issues. Traditionally, sub-Saharan Africa as a whole has critical problems with intra-trade that also increase dependency on large foreign trade partners. This regional trade gap provides greater leverage for United States when participating in the trade negotiations. And moving forward, while it is doubtful that AGOA will be replaced in the coming future, considering post-2025, I also think, based on my assessment, that it should not be surprised that new administrations are going to use the AGOA tool to be like a threat to also do business with most African countries. Successive presidents will come in and also see AGOA in a way that they kind of foster the American interest in sub-Saharan Africa. However, if you consider the African Continental Free Trade Agreement now being into function, African countries should approach AGOA from a strategic point of view. They could see AGOA from the one hand as a preferential trade agreement, while they would emphasize and scale their operations, and also making the Continental Free Trade Agreement come to life completely, and most African countries could benefit, making sure that AGOA could have a limited role in making lots of influence. Hopefully, we've been able to explain to you the reason why African countries should approach AGOA from a strategic point of view, and it should be considered based on its preferential approach, and most African countries should manage AGOA very carefully. Otherwise, overdependence on the AGOA approaches could limit their possibilities of expanding their operations and businesses or doing business with other countries around the world. I want to thank you for watching. We're looking forward to meeting you soon in our next episode. Have a good day. Bye-bye.